Okay, let's calculate the taxable amount of benefits that an individual will get based on their provisional income of 20,000. I have this spreadsheet set up so that you can calculate the provisional income. Let's go ahead and put the benefit in here just to serve as a reminder. So the benefit in these three scenarios is going to be $10,000, and our first provisional income is going to be 20,000. So we know that for our provisional income to be 20,000, this would have to be 19,500 or 15,000. Because of the formula of the provisional income is the adjusted gross income plus 50% of the Social Security benefits. Now, under this first scenario A, the $20,000 provisional, 20,000 of provisional income, how much of that 10,000 is going to be taxable? So this is a married couple, so we look at married filing jointly. The lower limit of provisional income is 32,000. So anything less than that means that the Social Security benefit is not taxable. So in this case, the 10,000 benefit is not taxable. Let's look at B. Now B changes a little bit to 41,000. So let's change our scenario here just so we can see our numbers a little bit better. So to get 41,000, I think this needs to be, AGI needs to be 36,000. Yes, to get us to 41,000 in provisional income. So now we have to do a little bit more work. The 41,000 falls between the lower limit and the upper limit. So what we're going to use is this calculation here. So the first thing we need to do is calculate 50% of 50% of the benefits, $10,000, which is equal to 5,000. Okay, so we're going to use that. Next step. We take 50% of the provisional income over 32,000. So the next step here is to take 50% times 41,000, which is our provisional income, minus the lower limit, 32,000. Real quick. That is 9,000. Times the 50%, which is equal to 4,500. So at this stage, we just simply compare the 5,000 to the 4,500, and this is the amount of taxable amount of the $10,000. So instead of all of it being not taxable, in this case, $4,500 is taxable. Now, under the C scenario, we have just a little bit extra work to do here. All right, so first off, we're going to be using 85%. So our provisional income here is 63,000. So this should be $58,000. So our adjusted gross income. So they make a bit of money in addition to getting $10,000 Social Security benefits. What they want to know, or what we want to know, is how much of that is going to be taxable. How much of the 10,000 then will be taxable? So in this case, we take 85%. Let's just do the calculation right here. 85% times the 10,000. And that's equal to 8,500. Okay, and we're going to do the same thing as we did before, except we're going to take 85% times the provisional income of 63,000 minus the 44,000, which is the upper limit. And this equals 19,000. So let's take 85% of that. And that's 16 equals 16,150. Now, there is another step here. It wants us, we have to add to this amount either $6,000 or 50% of the benefits. So 50% of the benefits is 5,000. And if we add 5,000 to that, you can see we're doing an unnecessary calculation at this point, because we're going to compare that 8,500 to the 21,150. And clearly, this is going to be the taxable amount of the $10,000 benefit based on adjusted gross income of 5,800 plus 50% of the benefits provisional income of 63,000. So the more money you make, the more taxable your Social Security becomes. But notice, if this keeps going up, up, and up, then the most that you'll ever be taxed on is going to be $8,500 of 10,000, or 85% of whatever your benefit is. So it's not that difficult to figure out how much tax you're going, or how much of your Social Security benefit is going to be taxed.